particularly because we have Donald Coxe. He is a strategy advisor to BMO Capital Markets. Donald, you've been following commodity markets for a long time. Are we in a bubble because there's a lot of free money available, or almost free money, that seems to have found its way into hard assets?
Well, not as much as you might think. Of the free money that's out there, it's being used mostly by the banking system to try to deal with their past sins. And no, we're nowhere near a bubble, because the fact is that China and India and other countries are still growing rapidly, and they need metals to grow. So that this conference is about, I was saying the theme here is that Chindia necessity is the mother of investment. Chindia is China and India together. That's what's driving the total global economy, and they have more than twice what's called the metal intensity for their unit. When we grow in this country, most of the excess money is spent on entertainment, travel, things like that. When they grow there, it means they're putting in plumbing, building houses, building facilities, and they need metals. So this industry that's represented here today is absolutely crucial to the growth of China and India and most of Asia.
Now, let me just stop you there, because it seems as though a lot of the talk has been about whether the stimulus packages, particularly in China or indeed in India, whether they are responsible for the demand. And if that stimulus comes off, that could mean a decline in the demand for these kinds of industrial metals, no?
Well, the stimulus package is an emotive term to use, because we're thinking of what in this country a stimulus package is. The Chinese stimulus package, their banking system is much more conservatively financed than ours is. Yes, they've been stimulating. They helped the global economy not to go into a deeper recession by keeping their economies going, but their economic growth rate never fell below 8%. They aren't dealing with wretched financial systems. In both countries, frankly, their banking systems make us look pretty sad.
When you look at the big mining companies, BHP Billiton, Rio Tinto, indeed Vale as well, have they run out of the big deposits in politically secure areas? Are they going to change the profile of where they hunt?
You put your finger on the big problem, which is that they're barely keeping ahead of the demand now, even coming out of recession. And the challenge of bringing on a new mine is much greater than it was, because the mining industry has a terrible history in the past of bringing on mines that caused pollution or getting shut down the next time a recession came. This time it takes, they estimate, 10 years or more to open a major new mine. So, and billions of dollars goes into it, so that what is the industry is behind the curve now. As a matter of fact, the industry should benefit in a sense from this recession, because it gives them a chance to complete their projects, because once the industrial world comes back a bit, China and India's demand is going to be sucking up metals, and to head off future inflation, what we need is massive new production to be brought on stream. Frankly, I don't think it's going to come on as fast.
So if you get this huge demand, as you say, that's going to happen because, let's say, the developed world will recover at one point, does that mean prices are just going to continue to rise?
Yes, because we never got the prices down to the levels where they were 5 years ago. Look, the S&P is back where it was 11 years ago, but the price of the key metals is back just where it was in the middle of the last decade, despite the crash. So it shows you that we never ever got to the stage where there was enough production to meet the fast-growing demands, primarily from China and India. And the problems in bringing on a new mine, of all the political challenges that they face, and they're basically in a situation where they're running hard to keep up. And China and India are saying, we cannot progress without what you produce. And you've got to get the job done. So what they're doing is setting up government companies and everything.
Well, I was going to ask you, if these are such strategic elements of, of an economy, does that mean sovereign wealth funds, government-based organizations, are they going to be the ones to really buy up these natural resource plays, much like what's happened in the oil and natural gas industry abroad?
That's the big fear. I mean, in the oil industry, big oil as we call it, it's an emotive term, only owns 3% of the world's oil reserves now. They're a small player relative to the government-controlled companies. In the mining industry, it isn't that way. But if they can't, I mean, if the price of copper went to $5 a pound because BHP and others weren't bringing on new mines, the Chinese would probably use some of that $2 trillion that they've got sitting around in foreign exchange reserves to do something about it. The challenge I gave the industry at lunch today was to make sure that doesn't happen, and I told the investors, what you've got to collectively do is see that these companies are valued high enough in the marketplace, what their real value is, so they can't be picked up cheaply.
When you talk about high value, I want to give you at least 30 seconds to tell me what's happening in gold. Do you think gold is an area where people are just using it as a store of value?
Just a store of value. I'm interested if you
Well, it's an $1,100 an ounce store of value.
But it's what it is that the amount of paper money or paper equivalent has expanded to sort of the levels of the Weimar Republic on a global basis. So there's enough people who say, I don't see how this is going to work out happily, so I'd better have some gold. And so what's happening here, even though we haven't got inflation returning yet, they're saying, I don't know how all this is going to work out. I want to have something I can believe in.